Good morning, everyone. Today is Monday, March the 17th. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. We have rolled to the forward contract. We did it last night based on volume, so we are in the M contract. That is the one that is in charge right now. So the numbers are a wee bit different. Let's go to the weekly. You can see that we lost the weekly 50 simple moving average in the E-mini S&P, and we are having trouble recapturing the close of the prior week. Now, we have really been quiet into the early morning, and so first thing we'll do is just make sure, do I have that number right? What's the close? 56.92 and a quarter. All right. Forget about that 35. Okay, so we have that number to get over today. As long as we do not get over that number, the sellers are going to get more aggressive as the day continues. If we breach that number, it appears that the zone near 57.2475 will be the next test. And then the one above that will be 57.72, okay? If we lose this edge, the first heavy layer of congestion in the E-mini S&P from a support perspective is pretty messy. It's 56.25 down to the base of last week's low, and that's 59.75. All right, let's collapse right into the 1 hour charts because, as you know, the opening range of the 1 hour candlestick is incredibly important to watch. Notice that we broke both sides of it. All right, so that's a little bit important. It tells us that we are rangy, but I did play this range out, actually put the trade on. I said, hey, if it comes down into this low, I'm going to buy it. I'm going to give myself a stop right around 56.45, and then I'm going to sell it to cover at the top of the gap. And both of those trades for the ES and the NQ did work out very, very nicely. I am flat. Okay, so what do we look at right now? Well, moving averages, kind of flat. Clearly, we've got a range. And so let's... did I do this already? I did. All right. So let's change this. Let's make this something that looks like that. And then that way we know it's the 1 hour. That's the 1 hour range we have to watch, right? Under 56.50. Make sure it recovers off of this number. If you decide you're going to take a long and it loses the overnight low, you've got to get out of the trade. That stop is near 56.49. Okay, so about a 7-point stop. Same thing above here at 56.92. If you try to short it at 56.83, it definitely does not need to break the high of this hourly candlestick, and that's 56.87. So 5 points of risk to the upside, 7 points of risk to the downside in order to pull ourselves into the right space in the trade. Okay? And that's what we're staring down. Let's go to the NQ. That's a lot of lines in the NQ too. Let's delete all of those. Remove all annotations. That feels super weird. All right, so here we are in the new forward contract. Let's look at the weekly very quickly. Let's look for the lines in the sand. Oh, that's pretty interesting. That low, now I'm going to have to change this again because it doesn't let us do that. Crud. All right, I'll figure that out in a hot second. All right, so here are the numbers that we're looking at. The low of 2 weeks ago and the close of last week pretty close together. So I suspect the traders are going to try and work through that zone fairly well. Could be a bit of a rock fight right there, to be honest, but it should move to the north, right? I do believe this is the pause that refreshes. Not particularly enthusiastic about where we're going in the long run, but we'll see. So let's clone this. All right, and let's move it to the 1 hour high. And let's do it again at the 1 hour low. And now let's change the colors here. Well, not the colors, well, just the line segment. Let's make it clean, right? Nice and easy. Annoying. This part of the month is the hardest part with the charts because I have to make these for the first time, and that's what's a little bit annoying. I can rotate them after the fact. All right. So, what are we staring down here, right? Traders, obviously we're in some kind of balance area, right? Right inside of the zone, rejected the top of the region, right? Just over the high of the balance, but of that first hour of trading, but we also did it on the bottom, right? So it tells us that we could have some kind of weird up-down expansion, kind of crazy. You have to be careful when this sort of thing happens. It could tell us we have a megaphone ahead, which could be a very big rise up and then a fall down, or a very steep fall down and then a rise up. It's very, very messy. Plus, we're in the roll. We just finished moving over to the new contract, so volume should start to build a little bit more. Notice how big the volume was at the end of the day. All right. So here we are. What's the upper motion? 19,994. And then very likely 20,100. What's the line below? If we lose 17,767, we will move down into 19,000. I don't know. I suspect this sideways action, 19,679 might be what we're after. Okay. What do I think the chart's going to do? I have no clue. I'm going to wait for it to break, right? My thought is if it breaks out, it's going to tell me it's going to break out, and then I'll chase it. But I've got opposing candlesticks right here, up and down. And I broke it on this side also. So I could fall right back into the range, at which point, because I believe we're stabilizing and we've got higher lows, I'm going to try and buy the dip, right? So I'll be watching for that. Not super interested in shorting it up here at this juncture. Not really feeling it. All right, let's go to the YM. And of course, by this juncture, I mean somewhere here at the 19,920. I really see upside here simply because my lows are going higher, right? I'm not feeling the short. Not feeling the short. That's you know what I mean. My father would have a heart attack if he heard the kinds of words that I use sometimes. Not feeling it. Express yourself, young woman. Use words that mean something. All right, let's take a look at the weekly. What do we have going on? The close of last week, the low of last week. We're looking at 41,850 in the YM and then 41,040. You know, I have a pretty negative view of what's happening here, and I'm not outside the realm of thinking, if we lose 41,000, we're going to go to value area high at 40,400 and then walk through all the way down to the point of control, which is 39,134. Notice all the low volume sitting in this instrument. To me, this shrieks of problems. So we'll need to be careful right there. Let's go to the 1 hour chart. These are liquidity areas in TrendSpider, of course, my online platform of choice. You know, my desktop platform of choice is MotiveWave. Whoa, that is a big candle. All right, so I'm going to leave, maybe I'll put 2 lines up here. All right, let me make this second one. Right, and then I'll do it again for the low and the high. Yeah, this just gets about to the 50% range and it falls over. It's still in the range, so if you took a short, the risk would be all the way up here at 41,850. You could say, you know, I'm just going to use the high of this, but then it might be wash, rinse, repeat, and it rotate over. Could you take a long here? You could. It's the point of control. We are going to move off of this zone. Price is above the 50. Keltner band is a little bit sideways. We are making higher lows. There's some element that says, yeah, sure, you could try. You could try it. But I wouldn't. There are better places to trade than the YM at this juncture. If we move to the north, let's clone this baby. If we move to the north, intraday, we've got 42,140. And then, let's clone it again. We've got 42,400, which, as you know, that should be a very memorable number. It should tell you what's going on in the broad space. All right, Bitcoin. As you know, Bitcoin is a proxy for the NQ. Right now, it's tracking the same motion in general, and it filled the gap. We talked about that at 78 and some change. Right? Let's change this back. Right? 78. So that's kind of the low bounce. Look what's happening here, though. This is a downward trending. What is this, a 5? I always forget. Yes. It's 5 EMA. All the bounces are still going to be sell zones here. This is my thought. Last week, high 86,000. If it breaks that area, it's going to fill the gap. And the gap is the week before, and that's 87.50. And then value area highs all the way up at 91. Right now, see this balance area that broke? This balance area is almost 20,000 points wide. So if balance rules hold, rules I have in quotations, you know, Pirates Code, basically guidelines, not actual rules, we have a $20,000 breakdown into 70. That's what this balance area potentially tells me about where Bitcoin is going. So until invalidated, I'm going to be shorting every bounce. All right, so let's go to the 1 hour chart. Let's go here, and then here. You can see that we are in the breakout formation, right? Came 50%. We held 50% of the range. That is an important number, but it only really matters when the range gets very big and it's tradable. But it does matter. So it came in, held the 50%, and now is in breakout mode. So for Bitcoin today, it is in a buy the dip mode. There is a gap sitting all the way up here at 85. Pullbacks for buy zones, 83,700. Great buy area. Stop 82,800. So 1,000 points is not that bad if you're using micro Bitcoin and you're traveling a little bit slowly. But if we're going to follow the cues today, my thought is that's up. Okay, so that's what we're looking at right now. So you watch that same opening range, it gives you what you're after. Okay, let's take a look at oil. I gotta check my other platform to see which chart we're on. 68. Oh yeah, this is the one that we're at. We're in good shape. Where's our opening candle formation? Let's draw that line right there. That's 67.81 for the low in oil, the high in oil, 67.29 for the low, and wouldn't you know it, value area high becomes support, and that is almost the close of that opening range candle. That's very, very interesting. What is happening here? Listen, it's going to bounce. Why? Because 66 is the floor and 70 is the ceiling. And so it's just moving back and forth, sloshing about. You know, there are a lot of very angry macro analysts that go, hey, you know, the administration's going to try and get oil down. It's going to 50. Hey, listen, it might be, but nothing goes in a straight line. And I got to trade it. So step off, buddy, if you're giving me a hard time for taking long in oil, right? We know that that is something really important. And, of course, we're going to have to pay attention to that. All right? So what does that mean? It means bases are going to be buy zones and resistance going to be sell zones. But right now, we've got buying pressure. So where's the pullback? Hey, if it could pull back to 67.81, we could have our risk down at 51, so about 30 cents, which is, you know, it's not chump change, but it gives us a nice ride up into support, especially if it comes down to 67.50. That would be ideal. $67.50, the ideal price point for long in oil today, with a stop really no more than 15 cents wide. That would be fantastic. It is a little toppy, but you know, if it pulls back and it bounces, we could have, you know, $1 of upside and then some. All right, let's take a look at gold. Wrong. Let's see if we're here. That gold contract is so weird. Yes, this is the right one. We've been dancing around 3,000 for a while. Listen, I can't even tell you how many podcasts I heard over the weekend that were like, oh, gold is $3,000 an ounce in the futures market. That is a clear sign that we are at the top of a social sentiment cycle when everybody's talking about it. So if you haven't gone long gold, please don't do it now, because if it runs, it's going to collapse. So we spent 6 weeks essentially inside of a range between 28.50 and 29.60, right? So $110. Here it is breaking out. If it moves half of that, it'll move up $55. 29.60 plus 55 is 3,010. It already went to 3,020. This is coming back inside of this box. Now, do you want to short oil? Short gold, just saying that? No, you don't want to do that. But if you go to the hourly chart and you go, all right, what's my value zone? Clearly, the value area is 2,990, right? To 3,010, maybe? Right? So that is what, $20? Something like that? All right, so you buy the bottom, thereabouts. You know your floor is 29.89, so your stop might be just under that. So you buy that and you sell any areas around 310. If it breaks through 310, get out of the way, let it expand, because it will come back. It is at the very top of social sentiment streams. That means that it's going to be late buyers that are going to be weak-handed, and you know what happens there. All right, so be careful with gold. Let's go to SPY. Feels like I've been talking for 50 years. Had another delightful night of 2 hours and 30 minutes of sleep. Joy. Okay, so here we are, bouncing off of the 50 weekly simple moving average. Of course, we should hold this, right? What are the lines in the sand? Let's do it. I know I've moved to green this week, but whatever. Now these guys are a little bit harder to trade using the opening range candlestick. The candlestick to use for the SPY is 8 to 9 a.m. Why, Henry? Because it's got all of the noise trapped in the candlestick. It is usually when all of the reports come out, and it gives you a general floor and a general ceiling. So I'm going to go to Fridays, and you're going to see the rotation. Right? Notice. That's 8 to 9 o'clock early. I think we had a 10 o'clock number, fell through the floorboard, but look, here's why I knew to buy the dip. Look at the slope. I did this in the futures market. Slope up, momentum up, trend up, reflexive action down, buy zone. Buy zone. Right? So what did I do? Watched it for 1 minute on the 1 minute candlestick and then chased in after it. And here we have the range. So same thing. That candle is in progress right now. It's the 8 to 9. So you draw the top of it. It's going to give you the range breakout. It really is pretty good. Actually, you know what? Let me just clear all these drawings. Right? Start over. It really does give us a range. You can use a Fibonacci for the 8 to 9 o'clock. Right? Oh, look at that. Shocking. 150 to 2. Yes. It's just a 1-to-1 balance break. And so that's what we're staring down right now. This 1 hour candlestick formation. We're waiting for this one to hold. We'll see what happens from there. But price action is going to be very keen. They're going to be very keen on getting above the close of last week and then the week before last, because this is not, this of course is 2 weeks ago, because it doesn't track what's happening in the morning events that well. All right, so we'll go here and we can see these ranges, 575 all the way down to 550, right? That is a big fat range. So you want to be careful, although I do believe it breaks out. I do believe that we're headed up. I'm not disinclined to short it until it breaks down, but not before, because now I believe the shorts are going to get caught on the back foot. All right? Cues. Let's get rid of, I don't know. Let's take a look at the weekly. I don't have too many lines drawn on the cues. There we are, trying to lift, trying to recapture the 50 on the week. That's above 490. The wick, super important right here, right? The low of last week and then the close of the week before last with, some measure of potential floor at 480. So that's what we're staring down. And you can see them holding 480. They're really trying their guts out, right? Okay, I won't use that one. I'll use that one. Remove. Okay, so same thing we're looking at. Breakout. Oh, should have left that long on. Holy moly. Breakout here is the volume point of control. 482 to 483. Next step up. Liquidity area at 488. Be careful, folks. Shorts are going to get caught flat-footed today. They are. So watch it. Realize that, where do we have yesterday's 9 a.m. is still holding as old resistance, new support. And then today's 9 a.m. candlestick is going to tilt the tail, right? I would use Friday's 9 a.m. candlestick as my support zone, 477. In terms of rotating up, there are going to be a lot of really nice options that we can play there. All right, folks, take care. See you soon. Trade small. Dangerous spaces.